But from an active trading standpoint, I haven't really been doing much, but I want to go over just a couple quick stocks really quick, just to remind us of like when these names that are leaders, can turn into kind of losers for a little bit. Is the reason why we want to use these protective stops. Like in that VHC, for example, health considered looked amazing going into new all-time highs in the end of December, and then just completely reverses and then quickly can look just as horrible. So a few of those that were very popular stocks recently, you think of like Roadblocks, going from 60 to 150, and now it's back to a new almost 52-week low. And that's something where when it's up here in these 130s and 140s and it looks amazing, most people, when they have that big winner, can get a little bit relaxed with the stops. I don't need to watch this closely. I need to give it time. And those are sometimes where you want it. When you start to say those things in your head, I want to just give it some time. I want to give it some room with those, your best winners. That's when you kind of want to start to, play a little bit more defensively and have some of those stops and raise them. AMD is another example. Went from 100 to 160. I know you had a couple really good trades in AMD earlier this year. And this is one where, it had that last little run up to 160 and then quickly comes right back to 100. These are spots when it gets up in those areas, like having a protective stop under those major, pivots can get you out of some stock, and you might be annoyed in the moment, but then you look, a month or two later when they pull back and you're, kind of glad that you took some. And just going through some of the trades with, members who had CRM, this was like a perfect example for myself where, this is more of an M1 name where, I was buying it the entire year. And after it broke out through, new all-time highs to 280, it looks amazing. This is the time where we want to give it time. We think it's going to go to 500 or 600. But in the back of, my head and the guys that are in it, it's like if it comes back down through that breakout area, down through 280, is when we want to start lightening up and taking some profits, because it's more than likely going to come back much lower than we can expect. And you fast forward, a month or two later from where we were taking some profits at 280, now it's back, it came down as low as the low 200s, which was the exact price we were buying it pretty much, the start of last year. So when we're able to take some of those profits and we have the confidence to kind of add back to them now, when if you didn't do that and you kind of sat through that round trip, it's much harder to have that conviction to come back in now when there are those opportunities. So that was just kind of something I noticed with doing a couple of trade reviews last week with some of the guys that were in some of these similar names, and just kind of a topic I felt was was kind of worth talking, since I hadn't had much active swings going on this past week.